In physical gold, we have continued aggressive buying by the central banks, which is the new factor in today's markets. They were absent prior bull markets. But it wasn't really till 15, 18 weeks ago, measured by the inflow of capital, retail capital, into ETFs, that we had public participation in the gold market. So now we have continued central bank buying and retail buying, which I think is what is responsible for that chart going parabolic. In 50 years in these markets, I've been through three bull markets, precious metals bull markets. And at some period of time, what happens is that when the precious metals narrative establishes enough momentum in gold, that the generalist investor comes into the precious metals space. When the generalist investor comes into the space, market leadership switches from gold to silver.
Rickrule, a seasoned expert with over 5 decades in precious metals and resource investing, shares his insights on the evolving gold market. He explains how today's surge in physical gold demand is driven not only by retail investors but also by aggressive central bank buying, a new and powerful force compared to past bull markets. As public participation grows, the market's momentum accelerates. Historically, when this phase matures, leadership often shifts from gold to silver. Stay informed. Like and subscribe for more financial insights.
My experience has been when you see a market with the enthusiasm of the market that we're in, that there are dangers of it being overbought. You have sort of a perfect storm of opinion right now. That chart and overlay that with very high profile investors urging people to buy gold, and the revision of the opinions out of the investment banks, as an example, saying that the 60-40 portfolio is now becoming 60-20-20. People increasing their recommended weightings of gold from 0 to 20. All of that hitting simultaneously suggests that investors and savers should be prepared for an air pocket, whether or not it occurs. In the near term, prices are set by the balance between buyers and sellers. And right now, there's all buyers and no sellers. In physical gold, we have continued aggressive buying by the central banks, which is the new factor in today's markets. They were absent prior bull markets. But it wasn't really till 15, 18 weeks ago, measured by the inflow of capital, retail capital, into ETFs, that we had public participation in the gold market. So now we have continued central bank buying and retail buying, which I think is what is responsible for that chart going parabolic.
Okay.
One could say that the parabolic move it reflects built-up tensions from the fact that gold didn't move parabolically for a very long time, despite the fact that the challenges in the assets that gold competes with, the euro, the British pound, the renminbi, the dollars, were in place. So one could say that what the chart is doing is playing catch up from at least a decade, but more likely 2 decades of undervaluation. That notwithstanding, as you suggest, there is some fear in a hockey stick chart. The backside of a hockey stick is frequently as steep as the upside was. In 50 years in these markets, I've been through 3 bull markets, precious metals bull markets. And at some period of time, what happens is that when the precious metals narrative establishes enough momentum in gold, that the generalist investor comes into the precious metals space. When the generalist investor comes into the space, market leadership switches from gold to silver. It may be that the price action that we've observed in the last 4 weeks is suggesting that that crossover period is happening now. I don't know. I'm not that smart. I would again, Steve, frankly defer to you in terms of the divergence between gold and silver prices and the acceptance, speculative acceptance of silver among generalist investors. The relative importance of things like contango or backwardation is not something that I'm well enough versed with to offer an opinion.
Veteran investor Rick Rule shares his perspective on the current gold market's explosive momentum. With both central banks and retail investors buying aggressively, he warns that enthusiasm may have pushed the market into overbought territory. Major institutions now recommend higher gold allocations, signaling a major shift in sentiment. Still, Rick cautions that every parabolic rise carries risk, and history shows leadership may soon shift from gold to silver. Let's get into the interview.
There are $3 trillion on deposit in the United States in non-interest bearing accounts. Maybe Governor Gruesome has one. People who are bad at math. We pay interest on your savings, even if you decide to write checks against it. If you decide that you might want to save in currencies outside the US dollar, given currency turbulence around the world, I think this is a wonderful time to do that. At Battle Bank, you can save in 20 currencies, not merely the US dollar, although certainly we encourage US dollar savings as well. If you would like your IRA to be your IRA, not a receptacle for Wall Street's products and services, if you'd like to buy a duplex or a triplex or an Airbnb, if you'd like to invest in private equity, gold, crypto, a franchise, whatever in your IRA, you can do that at Battle Bank or in a solo 140 or in a solo 401k. If you believe, as I believe, that precious metals are a great store of wealth, but particularly where if you need occasional access to the capital that you have tied up in precious metals without selling them, Battle Bank, unlike every other bank in the country, believes that precious metals are good security. We will establish a metals equity line of credit, similar to a home equity line of credit, in effect, access to a margin account secured by your gold and silver. A wonderful way to have your cake and eat it too. If that is of interest to you, and it should be of interest to anybody who's listening to In It to Win It.
As the global financial landscape shifts, investors are beginning to rethink how and where they store their wealth. With rising currency volatility and uncertain markets, the appeal of diversification, from precious metals to alternative investments, is stronger than ever. True financial freedom comes from understanding your assets, not just holding them. And as opportunities evolve, so should the way we protect and access our capital. Because in the end, smart money isn't just saved, it's positioned. Stay informed, stay strategic, and don't forget to like and subscribe for more insights.